And buying a car at year end is very common. And that's how the car dealership works. When you go in at year end, they tend to give you discount. They want you to buy it in this year and not to wait for next year. So when you buy this year's model. Next year they got a new model come up, so they're willing to give you discount. So not just for business, but a lot of people just for a car's sake itself, and you want to buy a car right now. But today we're going to talk about how to break down the action of buying car, because you can buy a plug-in electronic car. You can also buy um but you can buy a Ford 150 for your construction business. Then you can also buy a Mercedes passenger car. So all of these choices that you have, and I want to kind of hone in the tax side of knowledge so that give you some understanding of, when people give you a mileage rate and you're like, should I lease it or should I buy it? And standard mileage is good or no? So there's so many variations, right? But I'm going to chart it out for you today. So let's draw. Hey, I'm really good at drawing. I'm not kidding you. When I was younger, my dream was to be an artist. But my dad, and he would be 102 years old if he still live. And he told me that the artist really, you don't generate value. Your life could be hard, and if you are being an artist, he's wrong. I have some artist clients. They're doing so good. So I think it all depends. But he had never met artists who made a lot of money. And so he was like, no, you're going to go to accounting school. So that's what I did. So here I am. It's going to draw a little bit not so great, but it's still going to be a good illustration. So tell me what kind of car you're going to buy. I know that you really want to buy the electronic car, right? Oh, I don't draw them really well, but they are so good. They have this plug thing going on. And so this is electronic car. When you want to buy electronic car, obviously most of them are passenger vehicle. I know there's a Y model out there. This is cyber kind of a looking Tesla truck, and that can be claimed as a business property and as a listed property. But let's say we got Tesla, and this is a passenger car, right? So you have two ways of deducting this car. So you could do it, right? You can buy it under your personal name. You can buy it under your company name. If it is a company name, and what happened is the car belongs to the company, so you will be depreciating the property, and you will be treating that as your asset, right? So when you depreciate the property, and generally speaking, when we talk about depreciation for cars, you either treat them as a listed property, which allow you to depreciate all out through bonus depreciation, all right, or 179. Or it's a passenger vehicle, and you are just going to use it for business, and you are going to claim mileage on it, right? So it is your business property, however you want to expense it. So, for example, and one of our clients is a marketing company. They actually had a need to go out with the passenger cars, and the salesperson would go out to introduce product to client. So their passenger car, even though it's a Mercedes and luxury car, but it's really just that kind of business need to have that kind of car going into client's place. So they treat their car as a fleet, so their property, so they can be depreciated, and they have several of them, and number of people driving them, so they don't belong to anybody in particular. So in here, and you are treating them as a property, right? So what about you say, well, I'm actually going to buy this car, and I'm going to put on the company name and my name at the same time. Of course, you can do that, right? You can buy it on your company name and also put your name on it. There is a huge benefit over this one because when you buy insurance and you will insure just you driving it because you are not going to share with anybody else. It is a company car, so you can deduct it as an actual passenger car, but you cannot do the bonus depreciation because it is a passenger car. You are driving it, and you literally use it for your personal. So when you book your expense, and on your tax forms, you'll find that they're asking you, what is the percentage of business use? So you could get a car in the company name and write off the expenses, but at the same time, and have your own insurance cheaper instead of making that car a company car, right? When you make the car a company car, everybody drives, so the insurance is a totally different story. But what if you bought this electronic car under your name? There's a benefit to be under your name because you want the tax credit. Okay? Remember that tax credit is $750. So that's a huge tax credit if you buy it before the end of the year. I do have a slide right here. I'm going to show you because it tells you that by the end of this year, 2022, some of the cars that no longer have those credit, they used it up, like Tesla. If you buy a Tesla S right now, and you don't have that credit, but you could buy it under personal name, and you will use the mileage to claim your expense. Guys, do you know the mileage rate? And if you don't know, and then let me tell you, and right now in 2022, IRS increased the mileage rate in the middle of the year. So from January to June, it was 58.5 cents per mile. But from July 1st to the end of this year, it's 62.5. Imagine you bought a Tesla and you're going to do mileage reimbursement on your business use. And then, well, obviously Tesla don't have gas, but you still use the standard mileage. So that would give you a really good benefit, right? You got your tax credit. I'm not talking about Tesla, but other plug-in cars. Tesla, you don't have it anymore this year. But in 2023, it will be there. In 2024, the dealership will be doing the credit for you, so you don't have to worry about claiming that anymore on your tax return. But in 2022, when you do tax return, you still have this one too. You still have this credit to claim if it is available to you, right? Remember, there is this inflation rate, this inflation act came out in August. So from August to December, there are things did not change. So you don't want to rush to buy Tesla. If you want Tesla, wait until 2023. Now, what if you bought a car and, it's for work? Look at this. You even had a little cargo to go with it. And you bought this one. I bet you're not going to buy it under your personal name. Why? What's for? Do you have that many naughty kids? You're going to lock them up in the cargo? No, right? So this is for business. And because it is for business, this is like a Ford 150. If you're in construction business, Ford 250, 150, they're just hunk of a car. And they really are for the construction, hauling, pulling, and installing and stuff like that. So they're business expense. So you might ask me that, okay, Ying, I buy this truck for business, but what's the difference between 179 versus bonus? Big difference. Because for bonus depreciation, 2022, like this year, we can still deduct 100%. So let's say if this truck costs $100,000, then our bonus depreciation and would go up for $100,000 because it's a listed property. So when you get there, and if you say, well, if I have that much deduction, I'll have a loss. So that is okay because bonus depreciation can create loss. But 179 is another way of depreciating that you cannot create loss. So if you are already with a loss and you put your truck under 179, you still see the number on the paper, but it did not get deducted. So be really aware of how you are treating your property. And obviously, if you have a loss, and don't think about this one, and going for regular depreciation or going for bonus depreciation, right? So that is what we treat this one like a tools. Like they're really for production, they're not for passenger car. But what if I got a sport utility Mercedes, and so I, wanted to, it didn't have tax credit whatsoever. So I wanted to, use this car for business. So you can make that for business. That means business would have a title on it. And I would recommend you that if this is not for everybody to drive and you want to put your name on it as well, so you will have a joint ownership to the title. Then when you buy insurance, the insurance knows that you're the one driving it, so the rate is lower. But when you face IRS knows that your car title is under company, so it is legitimate company expense, title under company, right? So in here, you go into the same logic. You can go for depreciation, and you can deduct your insurance, you can deduct your car gas, what else? Parking? What else? Tag? Anything you can think of, right? So it's all deducted in the business. But let's say it's a company car, but you were taking the car, driving for vacation for 2 months. What's the right thing to do? The right thing to do is to reimburse the company. Reimburse the company for personal use. So now we kind of covered with all of these cars, and we were thinking of buying at the end of the year. And the one real issue though, folks, you don't really, I don't know whether you tried, the supply chain is not very stable. Even though you want to buy a new car, they don't have it. So maybe this is just limited to Midwest. I really don't know what to tell you, but I had several clients wanting to buy vehicles, but just there's nothing to buy because the dealership don't have it. When you place the order, and it would come 6 months later. So really, if this year end you're not gonna buy a car, then maybe reconsider what buying a car will do for you in 2023. And making sure that you plan, because it does take 6 months. And actually it did take 6 months. For one of our clients, I know that he ordered Tesla sometimes in April this year and received the Tesla to his house in September. So that's how long it took. But of course, when he ordered in April, there's still credit available. But by the time the car arrived, there's no more credit anymore because it's used up. So that was kind of upsetting, right? So let me show you where you would find the car, whether it's used up or not. There is a website you can go. So let me share that with you. See, this is the website. This is U.S. Department of Energy Alternative Fuels Data Center, and right in here, it listed all the cars that eligible for that tax credit, but it tells you which one is already met the cap. So if you are buying it right now and you want the cap, for example, you buy Tesla 3, the cap is already met. So you want to wait, I guess you can order it now and making sure they deliver that to you and you pay for it in 2023. Otherwise, you lose your $7,500 tax credit. When we see tax credit is just not a small number of 7,500, right, folks? You understand? I'm really sorry. So you understand that it's not just 7,500. 7,500, if you divide that by your tax rate, let's say your tax rate is 25%. So you divide by 0.25, that's a $30,000 income reduction. That's a lot. So make sure that you watch the tax credit before you buy. If you buy a used electronic car, you have $4,000 tax credit. And in one of the scenarios where I said that, okay, you buy your Tesla under your personal name, you get your credit, and then you claim mileage over your business use of personal car. Isn't that cool? That's really a good way to get that mileage that IRS already announced. So this is IRS website where they say that for a business, rate from January the 1st to June 30th is 58.5, but from July 1st to December 31st is 62.5. We have never had such a high reimbursement because the gas went out of roof, right? So for medical and the movie, you have 18 before July. After July is 22. But charitable is 14, has been 14.